All right. We're glad everyone is joining us today. We are going to begin the second of our three-part series on keeping your financial house in order. As you'll recall, last week on May 12th, we did a class on getting your financial house in order, gathering your checkbook, and making sure you just know what are all your obligations out there. And we focused quite a bit on that. We also talked about making sure we follow three basic principles of highly successful people. As you'll remember, Dr. Stephen Covey, in his famous book, The 7 Habits of Highly Effective People, talks about three attributes. The first, if you'll remember, is successful people, successful entrepreneurs are proactive. They're not reactive, they're proactive. Second, they have a vision and they begin with the end in mind. They know where they want to be at the end of this year and the end of 20 years. And the third attribute of highly successful entrepreneurs is they put first things first. They make sure that their actions are in line with where they want their business to go. And during this economic crisis as a result of the coronavirus, there's no doubt about it, we need to be focusing on putting first things first. Hey, Patrick, as I look at the screen, is it okay? Can everyone see me all right? Should have done it on the front end.
I can see you.
Perfect. We're getting the nod, so we'll keep moving forward. So that was our first webinar. Today, what we're going to talk about is preparing and managing a cash flow budget. Now, I want to be really clear. What we're going to do today is for those businesses that operate on a cash basis method of accounting. Not accrual accounting, but a cash basis of accounting. I have a funny story I'll share with you. Oh gosh, I was teaching a cash flow class a number of years ago, and it got to the very end, and I was feeling really good about myself, and I said, gosh, is there any questions out there? And finally, this entrepreneur raises, I think it's his hand, and he said, does this apply if you're accrual-based accounting system in your company? And I just went, oh, yo, I should have made that announcement earlier, because there's a huge difference between accrual-based accounting and a cash basis. Today, we're focusing on a cash basis. Accrual gets kind of complicated, so if you have an accrual basis method of accounting, just give me a call. I'll come sit down with you. It's free, it's confidential, and we'll go through and do the exact same exercise using accrual-based accounting. And then next week's class that you want to make sure you attend is we're going to talk about what is a financial statement, how do I prepare it, and perhaps most importantly, how do I read it? We've got a lot of entrepreneurs out in Eastern Oregon that use QuickBooks or QuickBooks-like programs, and they print out financial statements and they don't know how to read them. They don't know how to take advantage of the information that's in there, and most importantly, they don't know how to use them for planning purposes. Well, we're going to fix that next week. But today we're going to focus on preparing and managing a cash flow budget for your business. Now, really quick, I want to share one basic principle that all successful entrepreneurs have, and that is they have the ability to take complex ideas or complex numbers and break them down to the simplest component. And that's what we're going to do today. You know, quite often entrepreneurs, the only time they do their financial statements or they even create a budget is around tax season. But let me tell you, there's a better way to do it. And that is by taking a look at your financials and breaking it down to the day. It's the simplest component. So what we're going to do today is we're going to figure out how do we determine what our income is and our expense by the day. Now, if you'll remember last week when we held our first live webinar, we talked about the need for you to get your receipts and get them organized and to know what is being spent on business and what is being spent on personal. We also asked you to make sure you prioritize any debts or obligations you have. And you need to do it in two ways. One, a chronological sequential order of the largest debts down to the smallest. And then do the exact same exercise, but looking at interest rate, from the highest interest rate, the bill with the highest interest rate, or the obligation with the highest interest rate, all the way down to the one with the lowest. Why would we do that? Why would we want to prioritize them that way? Gosh, it's kind of the Dave Ramsey principle, in that you want to pay off those obligations that have the highest interest expense first, and just keep whittling it away, and then the next one, all the way down to the one with the lowest interest rate. The reason for that is the power of compound interest. Here's your homework assignment for next week. Do a little homework, do a Google search on the power of compounding interest. It is one of the greatest tools that can either work for you or against you. And we're going to talk about that next week. Anyways, we know what our bills are, we know what we owe, we know it by the largest dollar amount, and we know it by the highest interest rate. And then remember also from last week what we talked about? The most important thing for any entrepreneur to do? Anybody remember? We talked about that. Some folks think the most important thing a business owner should do is create their business plan. That is important. The first thing or second thing they should do maybe is get a customer. That's important. But we talked about making sure you have a personal budget for your home. So I hope you followed that direction from last week, because it's really, really important. So one of the attributes of successful entrepreneurs, in addition to breaking things down to the simplest component, is they have a personal budget. Okay? And remember, keep everything in that personal budget, everything from your rent and your utilities to your food, down to those personal discretionary items, whether it's going to the movies or making sure you have money for a sporting event. Put it in the budget. What we're going to do for today's exercise is we're going to just assume that our personal budget is $3,000 a month. And I'm just going to write that number right here. And we're going to come back to that in a few minutes. But let's just remember $3,000 a month is our personal budget. So let's create a company. I always joke with folks that I can run any company. Doesn't matter, I can run any company. I may run it into the ground, but I can run any company. And so what we're gonna do today, as an example, is we're gonna run a pizza company. I was visiting with Denise earlier, and she has shared with me that that would be a good one to use. We've done it before, so we'll do that today. Now, I wanna be clear with everyone who's watching today. We're teaching principles, okay? Every company is different. There's many, many more expenses than I'm listing here, but in the interest of time for today's webinar, we're just gonna put a couple of them in here. It really doesn't matter because we're teaching principles. At any point in time, if you wanna sit down with me and go through this and really put the detail on your business, I'm more than willing to do it. Give me a call, we'll make that happen. But again, we're teaching principles today. So the very first thing we need to do in a cash flow budget is we need to know what our beginning money is on hand. Remember last week I told you you had to get your bank statements in order? Well, this is why. We need to know how much money we actually have on hand. And so I'm going to assume for our example today that we have $1,000. $1,000. We're starting off the day on Monday with $1,000. And by the way, keep in mind, all we're doing is putting a budget together. Later on, I'll show you how to refine this budget to make it more accurate. But again, it's about principles to show you how money flows into your company and how it flows out. So we talked about that we're going to have a pizzeria. In the interest of time, we're only going to sell two things. We're going to sell a pizza and we're going to sell soda. And again, I'm making this up today for the principles that are going to be taught. I'm going to assume on this Monday that we sold $1,000 worth of pizza. By the way, how can I make up that guess? Well, remember I shared with you last week to get your bank statements. And so we can go back to this date. In this case, let's say it's May 1st. And we can look at May 1st, 2019 and see how much money did we earn that month. Okay, we can go to May 1st, 2018, May 1st, 2017, and we can get the deposits we made. Then what could we do once we know those totals? We get our handy dandy calculator out, which by the way, every entrepreneur should have a handy dandy calculator to break the numbers down to this simplest component. Entrepreneurs who are successful have one of these around them all the time. So we go and we figure out what our monthly sale was by looking at our previous bank statements. The more averages we can get by going back numerous years, the better. We take that monthly total and we average it and we divide it by 30. And so in this case, based on this scenario, our average would have been we probably sold about $30,000 worth of pizza in the month of May, and dividing it by 30 days, we came up with this average. I'm going to say soda, oh gosh, I'm going to say $500 worth of soda. We must have had a lot of soccer teams in that day for me to come up with that number, but again, it's about principle. So we started the day with $1,000. We sold $1,000 worth of pizza. We sold $500 worth of soda. And so our total sales for the day is $1,500. Where we came up with that? We checked out our bank statement. We knew because we got ourselves organized from last week's meeting that we do have $1,000 on hand. We put it right there. We know by looking at previous bank statements a year ago, 2 years ago, 3 years ago, for the same period of time, that we average these income sales. In this case, for $1,500. We then look at our expenses, our cost of goods sold. Again, how can we do that? How can we do it? We go back to our bank statements. Remember, we got organized last week. We took them out, and we add up what are those different categories from 2019, 2018, 2017. What were our cost of goods sold in the month of May? Well, I'm going to say for the month of May, our cost of goods sold averaged about $750 per day. $750. That might be a little high, but you know what's great about a budget? If that's high, we have the ability to be proactive. Remember, we talked about that principle to be proactive and figuring out how to reduce that cost. We then look at our labor, and there's two ways we can do that. We can either look at what our actual labor is going to be for the month based upon the number of employees we have, the number of hours they're going to work, and at what pay schedule, and we can put it in there. Or if nothing's really changed in our company, once again, we can go back to our previous bank statements and see what we did. In this case, I'm just going to put $400. Our rent, that gets a little different because we want to know what our daily cost is. And so we know our rent is $2,000 a month. That's pretty expensive. We may want to look at that. As a matter of fact, that's probably too expensive. I'm going to say our monthly rent is $1,000 a month in our space. So you take $1,000, get your handy dandy calculator out, and we divide it by 30 days. And that means our daily rent on average is $33. How did I come up with that again? I know my monthly rent is $1,000. I want to know what it is by the day. We break it down to the simplest component. We take that $1,000 a month, divided by 30 days, we get our daily rent cost of $33. Now keep in mind, that cost occurs every single day. All the way, and you probably can't see it, but all the way over to Saturday and Sunday. Even if we're not open on Sunday, that rent cost has to be paid. And in our situation, it's on average of $33 a day. You know the cool part though? Landlords are okay with you skipping. And so, you know, if you decide not to operate one of these days, they'll just let you forget that. It will work that way. Every single day, whether we operate or not, that expense occurs. So if we choose to take a day off, say we decide every Sunday we will not be open, which is a fine decision. There's lots of reasons to make that. It doesn't matter. It's still costing us $33 a day. Then we have our utilities. Now, people will say, how do I know what my utilities are? Well, remember about being proactive? Either we go to our previous bank statements, or we call up the utility company. If it's a city for water and sewer, we call them up. If it's the power company, we call them up. If it's a gas company, we call them up. If it's the garbage company, we call them up. And we ask them, what's the cost? And in this case, I'm going to say our utilities every month are $500 a month. What do? Get the trusty calculator out, take $500 divided by what? What are we dividing it by? We're dividing it by 30. 500. I don't have my glasses on, so we're going to cross our fingers and get this right. $16. 16 bucks a day. 16 every day, running across there, all the way across. And again, remember your utilities are just like your rent. On average, every day, this is the cost of being in business. Whether our doors are open or not, on average, this is our cost. All right, gang, so we started the day with $1,000. By the way, did I tell you we're just putting a budget together? In a few minutes, I'm going to show you how to refine this, so that way a budget can get pretty darn accurate. Right now, we're just kind of round out there. We're going to bring it in close here in about 10 minutes. We started the day with $1,000. We had sales of $1,000. We had soda sales of $500 for total income of $1,500 for the day. We know our labor is this, or excuse me, our cost of materials is this. By the way, if you're a startup company, just a quick note, and you're doing food, and you're not sure what your cost of goods is going to be, reach out to like a Cisco, and they'll sit down with you, and they'll help you figure out exactly what that percentage of food cost is going to be based upon the menu you create. Again, it's about being proactive, doing a little Google search, and that information is readily available. All right, we went through our expenses, we went through that exercise, so let me add those up. Here we go, $750. Patrick, you're out there. If I mess this up, you better correct me. $1,199. You know what? I'm going to round that to 1,200. Just makes easier math. Easier math. I'll round that up to 17. A little sloppy there, but it'll work. We'll round that up to 1,200. Makes much easier math. Started the day with 1,000. We saw that by looking at our bank statement. We had our sales. We had our expenses. Again, remember we're talking principles. For expenses of 1,200. Now we take our income minus our expenses, and we get a difference. In this case, 1,500 minus 1,200 equals $300. Everyone see that? Personal allowance. What did I say the first thing an entrepreneur should do? Is make sure they know what their personal budget is to keep their home going. In this case, we said $3,000. What do we do with that $3,000? We break it down to the simplest component, and we want to know what does it cost every day to keep our home functioning. In this case, we take $3,000, divide it by 30 days, and every day, our home needs $100 to keep the rent going, to keep the mortgage going, to keep the car payment, the insurance, food on the table, little Timmy with his Nikes so he can, shoot the baskets, little Patrick with his cleats so he can play football. We need $100 every day. Everyone see that? Our difference is 300. That gets a little down. So I'm gonna, you guys can see that. Then we have our loans. Do we take out any loans to start our pizzeria? Remember last week we talked about we need to know what those loans are. What is the highest interest rate? What are those payments? This is why we need it. So we can put it into our cash flow budget and determine what is it going to cost us every day to get those bills paid off. Now, again, we're talking principles here, so I'm just going to make up a number. And I'm going to say our monthly loan payments are, I'll make up a number. I'm going to say $500 a month. I know that's really low. Move over. Okay. At $500 a month. I know that's low, but that's the number we're going to use right now. So we take $500, divide it by 30, and every day, whether our pizzeria is running or not, whether I'm feeling sick and don't want to go in, whether it's snowy out, every day, I need to be generating $16 a day to make loan payments. By the way, I'm going to digress really quick. I'm going to digress. Let me share with you really quick how to get a bank loan. Banks look at 6 items. 6. The very first thing they look at is your character. Who are you? Are you a nice guy, gal? Are you involved in the community? Do you participate? Do folks really like you and feel like you're a good fit in the community? Character's number 1. Number 2, they look at your credit. Do you pay your obligations on time and as agreed? Do you keep your debts to a minimum? Not having too much interest expense, but to a minimum. Okay? That's part of credit, is not only paying the bills, but not having too much debt. Debt equals risk for a lender. Number 3, they look at collateral. Is there a second source of repayment to pay off the loan in the event that the business venture doesn't make sense? By the way, sometimes folks get a little caught up on collateral, but just imagine if you were the lender and you were loaning money to a person who is doing this business. You probably want collateral too. The 4th thing they look at, first is, remember, character, credit, collateral. The next is cash flow, what we're doing here today. Which, by the way, just imagine going into your banker and your banker says, okay, well, I really like your character. You got good credit. I see your collateral. Tell me about your cash flow. And you turn to the banker and you tell her, would you like to see it by the year, by the month, by the week, or by the day? What do you think your banker's going to do? You're going to have a heart attack. A lot of folks come into the bank, they have a bunch of napkins in their pocket and they put it on the table. What if you were able to go into your banker organized with the separation between your business obligations and your personal? You know your debts by amount and by interest rate. And, by the way, you can show your lender what your daily costs are. That's powerful, and that's the power of what we're doing today. Character, credit, collateral, cash flow, contribution. What are you bringing to the table? What are you offering to the deal? Are you asking the bank or the credit union to do all of it? Or are you contributing as well to your drink? Keep in mind, this isn't the bank's drink, this is your drink. And so what are you contributing to make it happen? And then finally, if you've noticed, they all start with C. The last C is community. And I actually added that one. When you talk to the banking community, they'll tell you there's 5 C's. In economic development financing, you look at the community. Is the project that you're trying to do good for the community? Is it good for the county? Is it good for the city? Hey, look at that. Those all start with C as well. Community, city, county. It adds to my argument there. So that's what banks look for. Let's get back to our cash flow. So we, in absent-mindedness, I lost my pen. So we started the day with $1,000. We brought in income of $1,500. We broke our expenses down for the day, remember, by breaking into the simplest component, the day. We took monthly expenses we may have had, we divided it by 30 days to get a daily cost. We took our income minus our expenses to get a difference, in this case of $300. We figured out our personal allowance because we know that's a priority. We just figured out where our daily loan costs are, and then we get to the category of savings. My friends and neighbors, nothing's more important than making sure every day you're setting aside a few dollars for your future. I don't have the exact number on front of me. Julie ran this for me yesterday. But $10 a day for 10 years at 6%, you know how much that comes up to? It's almost $9,600-ish. It was something like that. Just by doing $10 a day. Just imagine if you gave up a couple mochas, or you didn't go to McDonald's every day, or just imagine if you just figured out how to prioritize setting aside $10 a day. Power of compounding interest, which by the way, that near $10,000, if you leave it in there and you keep letting it grow and you keep letting it grow, all of a sudden that growth starts to explode on you and it becomes real money really quick. Make sure you study the power of compounding interest. In this case, we're going to say $10 a day. Okay. We brought in $1,500 for the day. We had $1,200 expenses, leaving a difference of $300. We paid ourselves. We paid our loans. We put money into savings. Now that doesn't line up very well. I'll do this to make it a little easier for everyone. So we take 300, our difference, minus 100, minus 16, minus 10, to get a difference of 170. 174. 174. Started the day with 1,000. We had sales of 1,500, expenses of 1,200 for a difference of 300. We took out our personal allowance, we paid our daily loan, we saved, and it left us with 174 bucks. Does everyone see that? No, you guys don't get this. You just don't get this. How could that be? I started the day with 1,000 and I have 1,500. That means I had 2,500 bucks. I haven't been to the bank. I got 2,500 bucks in my hand. And you're saying, after all this, I really only have $174 that I earned today? All right. By the way, does the IRS and the Department of Revenue want a little piece of this 174? Yeah, they do. And so part of what we have to do is we have to figure out what's going to be the tax bracket we're in. Now, in the interest of time, in the interest of principle, I'm not going to get deep into this. If we need to visit on this, I'll refer you to a CPA, because I'm definitely not a CPA. But I do know the IRS and the Department of Revenue want their slice of the pie. One of the things I do, though, and it's a great exercise, is go get TurboTax for small business and run a make-believe scenario. It's a great practice where you can put in there what potential income is and what your expenses were for the year, and it'll tell you, going through a little formula that's so easy, what your tax obligation would be. And so for a $99 or $150 investment in TurboTax, you have a toy you can play with to help you really sharpen up your business. In this case, I'm going to say they want 30%. And again, I'm making that number up. That could be higher or lower. So I take 174, I multiply it times 30%, and I don't have my glasses on. 174, about $52. $52. We take 174, we minus 52, and we have a difference of 122. We started the day with $1,000. We talked about in our make-believe company that on this day we brought in $1,500. We had expenses of $1,200, leaving a difference between this and this of $300. We paid ourselves, we paid our loans, we put some in the savings, and that left $174. We assumed the IRS in the state of Oregon want 30%, which is $52, leaving $122. We now take $1,000 our beginning cash on hand, $1,000, we add in our ending cash of $122. So we started the day, after all this work, we started the day at $1,000. After all this work, at the end of the day, we have a new cash position of $1,122. Here's the takeaway, gang. Here's the takeaway. Just because I have $2,500 cash on hand, I haven't been to the bank yet. It's sitting right here, my greasy little palm. It doesn't mean we have $2,500. Through basic mathematics, by breaking complex numbers down to the simplest component, we found out our real cash position today is $1,122. You know what we do with that? Take this right up here, and we start over. And we go through that exercise again. Now, one of the takeaways, one of the principles you need to remember, just because you have, in this case, $1,500 or $2,500, because you have it in your hand, doesn't mean that's your true cash position. Quite often, I see the spouse of an entrepreneur, male, female, they're all guilty, come in and say, man, we just made $1,500 today. I see it. They take half of it, go buy themselves a new elk rifle. Elk season is coming up. Sitting there at $2,500. We can afford to give up half of that. They grab $750. They go off to get their elk rifle. But guess what? Remember that sound? 30 days later, these bills are all showing up. And if we take that cash, it impacts this cash. And when this cash gets impacted, we don't have the ability to pay our bills. Let's play through this. Tuesday. You know what? I'm just not feeling like work today. I got a new elk rifle. I'm going to take the day off. You know what happens to my income? Zero. I told my employees to take the day off as well. It's a snow day. Pick the excuse. If we're not open, we have no income. Zippo. We may not have this expense. That may be zero. Our labor, what do we tell our employees if we choose not to be there? We may not be there once. You can even get away with not being there twice. But as soon as your employees realize you're not there on a daily basis, guess what happens with them? They tend not to come also. they're gonna follow your lead. And so if they see you're working, they're gonna work. Well, we better pay them. Just because we want to take the day off doesn't mean we can't afford to lose them by saying, oh, sorry, you're without pay today. $400. Rent? Landlord doesn't care, it's all season. Landlord wants their $33. Utilities, power company, they want their 17. What happened to our expenses? How does that work out to you? $450 in expenses. 0 minus 450 gives us a difference of negative 450. Do we still need to pay ourselves? Yeah. Do the loans still have to be paid? Yep. We could choose not to do the savings, but if you truly understand the power of compounding interest, just by taking one day off, it affects your future earnings 20, 30, 40 years from now. Keep that in mind. There's an opportunity cost. Another basic principle of business, opportunity cost means if you do this, then you can't have this. If you choose to do one thing, the opportunity cost of it may be this. Let's go through this. 450. Oh, I forgot my 16. I messed this all up. 16, 10. Our new difference is 450, 550, 560, 576. I don't have to pay taxes, at least we lost money there. And now here's where this gets powerful. We started the day because of a strong day here with 1,122. We had 0 income, 0. We still had expenses. They didn't go away. In this case, even though they weren't 1,200, they were 450. 450 plus our personal allowance of 100, plus our bank payment, plus savings. Then at the end of the day, we lost on our cash position $576. We didn't have to pay taxes, but now we take our starting cash position of 1,122, we minus what happened today, $1,122 minus 576. Our new cash position is $546. Come on. I haven't been to the bank yet. I have $2,500 cash in my hand. Sitting right here, it's cash. Started the day with this, I earned this, sitting right here. But through the flow of money going through the business, and in some cases the lack of money for a single day, even though we have $2,500 cash on hand, our true cash position is 546. What do? We move it up to Wednesday, and we start Wednesday with 546. Everyone understand that principle? If there's any confusion on that, don't hesitate to reach out to me, to give me a call. I'll sit down with you. Again, this is purely for budgeting. Purely. But by the way, let me ask you this. What if after day 1 we said this was our budget? And at the end of the day, we were proactive. We knew where we wanted to take our company. And we actually took our receipts for the day and we compared them. Now we have the ability to take what we thought was going to be our budget and compare it with the actual day. 10 o'clock at night, our business shuts down. We take our actuals and we compare it. And we ask ourselves, I thought I was only gonna do $1,300 in income, but I actually did $1,500. Why? What was the difference? I thought my expenses were only gonna be $1,000. They actually turned out to be $1,200. Why? The power of what we did here allows you to see that just because you have money doesn't mean you really have money. Okay? It allows you to see how money flows in and day out. By the way, just imagine, again, back on what I showed earlier, if you showed this to your banker. What if you showed her how your money came in? And then more importantly, when you're sitting down with your banker and you're talking about needing some financing or talking about what a future venture would be, you say, you know, Madam Banker, I'm looking at these utilities, and man, $17 a day is kind of expensive. I was thinking, you know, if I put in different lighting, cut the heat from 72 down to 68, maybe get a little recycling instead of having 2 trash cans, I just got 1. I think I can cut that from $17 a day down to, I don't know, $14 a day. Huh, who cares about $3? $3, crap, that's nothing, nothing. Well, let's take $3 and multiply it times 365 days. Turns out to be $1,095. By simply managing our utility bill a little tighter, we were able to change our cash position by $1,095. What would that mean in this situation if we wanted to go elk hunting? Well, gosh, by being a little bit smarter and knowing how our money flows in and out, and making some smart decisions, now we've got the cash to do it. Or, even better yet, we have the cash to pay down one of those bills that we talked about earlier that's higher interest rate and pay it off. Rather than paying 29% on the credit card, just by changing how we manage our utilities, and not a huge thing, but being smart about it, we can now apply $1,095 to those high cost charges. It's kind of a smart thing to do. The best entrepreneurs think in these terms. They know how money flows in, they know how it flows out. They understand just because they have cash doesn't mean that's their cash position. They know that by breaking these big numbers down to the simplest component of the day, they can make smart decisions on how to make little incremental changes that are easy to live with, but over 365 days, make a huge difference in the company. Is that being proactive? Yes. Is that thinking smart? Yes. Is that beginning with the end in mind? You're saving that money and you're paying off those credit cards. You're going to like your position 20 years from now better than if you don't. And is this helping to be a little better than this and putting first things first? Again, thank you, Dr. Covey and the 7 Habits of Highly Effective People for teaching you those principles. So we want to share with you, this is today's webinar. How are we going to do questions? We have a question. So we're going to try this as best we can.